Gupta, the chairman and manager of Havells India, has joined us. Mr. Gupta, thank you very much for joining us. Let me start with GST itself. Rates on cables, etc., has been higher than what was expected. They've come in at 28% versus the current 18%. What's your reaction?
Well, I guess it doesn't change anything. The fact is that we were expecting a lower rate at 18%. We thought all building materials would come at the rate of 18%, especially with the fact that earlier the VAT plus the excise duty came to around that number. But you know, life goes on. If it is 28%, we expect it to be 28%. It will you know, definitely impact some of the consumers, but on the other hand, the builders and the contractors, they'll be able to take credit of that, so that is something which is all right. But for the consumers, definitely it may mean some higher prices.
Mr. Gupta, good morning. So you mean the entire price hike will be passed on to consumers, and do you think they'll be able to take it?
No, so we don't need to increase the prices. The base prices continue to remain the same.
So then will demand be impacted due to GST? I mean, Blue Star, Hitachi, Vijay Sales have all been suggesting that overall sales have been less in the month of May, and June is also expected to be a washout. Is that your reading as well?
I do believe that there will be destocking in the trade in the month of June, and it makes sense because, you know, the credit which with the dealers will be getting will be lesser than what they have paid for, and hence there will be a certain loss to the dealers if they retain the stocks at the end of June. So it makes sense to, you know, buy and sell material which they can sell in June. There will be, you know, an impact because of that, but I think that will be taken care of in the month of July itself, because ultimately the demand itself, overall demand over a longer period of time, should not be affected.
Okay, well, Mr. Gupta, now margins. Does all this mean that you will have more schemes for dealers? Now, that will mean a headwind to your margin, as well as competition, commodity prices, the Lloyd's takeover, and now GST. So, you know, what does all this mean for margin in the near term?
Well, I guess, you know, it is a continuation of the demonetization. I think, you know, the fact is, because of this, we may have not been able to improve the pricing in the market because of, you know, some uncertainty in the market. But there's no point in, you know, giving schemes and encouraging dealers to stock more material when, on the other hand, it makes sense to actually reduce the stocks at the end of June. So I think it will be counterproductive and counterintuitive to actually start giving schemes and push material in the market. In fact, I think as a company, we do not believe in doing anything which affects the trade in any way.
Okay, but can you give us a range for margins? The key concern for investors has been that sales growth is coming at the cost of margins, which have been stagnant for 2 years now.
Well, I think at this moment we would, you know, not like to comment on the future. We would want to get through this transition of the post-demonetization impact as well as the GST impact. There will be uncertainty for the next couple of months, and I think things will settle down at that stage. So I'm not, you know, too worried about the margins, because in effect, you know, we are a strong franchise, we are a strong distribution, so overall margins should not be dilutive. It's you know, maybe a couple of months of margins here or there should not affect the overall picture.
You know, cash generation from operations was meaningfully lower last year. Is there anything to be concerned about here?
No, I think, you know, we've invested a lot in terms of capacity expansion for the coming years. We've taken a couple of pieces of land. So keeping in mind that we will be expanding our manufacturing footprint, both for electricals as well as for consumer durables. So I think it is not really a matter of a big concern.
Okay, now this one keeps coming in the stock market buzz. Kenstar is on the block. You have bandwidth for acquisitions. So your strategy?
Well, I think there's no doubt that we would be open to look at acquisitions in the future as well. But at this moment, we've recently taken Lloyd, and we would like to integrate it for a few months, and then, you know, continue to expand both Havells and Lloyd. So I would say that we would not be too aggressive for the next few months on any more acquisitions.
Okay, Mr. Gupta, thanks a lot for your time today. That's